Investors call this the safety tax, the $7 billion price Roblox just paid. Wall Street hated that bill because it exposed the part of the business nobody wanted to price honestly. Child safety is not free when millions of younger users are packed into one giant social product. Friction showed up, growth slowed down, and the stock got punished. Today Roblox still has money, scale, creators, and audience. Management finally admitted something shareholders never wanted to hear in plain language. Guidance came down, daily user growth should dip next quarter, and stricter safety tools created more drag than expected. Everything important in this quarter starts there. Underneath the headlines, another change matters just as much. Older users matter more because they spend more and create fewer regulatory headaches. Start with the headline numbers before the hot takes bury them. Roblox lowered its full-year bookings outlook to a range of $7.33 billion to $7.6 billion. Previously, the market was told to expect more. Plainly, that means management now expects less spending inside Roblox this year than it said before. Executives said safety headwinds are continuing. Age checks, they admitted, created more friction than expected once the rollout expanded. Platforms built on fast entry, social connection, and spending do not like new barriers. Slower flow turns into weaker growth the moment investors are paying for speed. Next comes the part weak coverage keeps missing. Revenue still rose to about $1.4 billion. Bookings still climbed to about $1.7 billion. Cash from operations reached $629 million, while free cash flow landed at $596 million. Traders did not punish Roblox because the core business stopped making money. User growth came in softer than hoped, expectations were cut, and management warned that daily active users should decline from the first quarter to the second quarter. Therefore, the sell-off was about a weaker forward story, not a broken business. Resetting the picture for a second, the business is not broken. Rather, it is still printing money. Why panic then? Because Wall Street realized the easy version of Roblox is gone. Friction kills growth, and Roblox basically said so in its own language. Every extra step loses people who would otherwise move through the product without thinking. Each extra identity check creates another place where users stop or leave. Company comments said the age check rollout restricted communication for users who had not verified. Verified users also ended up in a platform where chat felt quieter or more restricted than before. New user growth slowed too, which matters because the machine depends on fresh people entering quickly. Safety changes may be necessary and smart. Short term, they still slow the engine. Under that growth story sits a trust problem. Financially, Roblox set aside $57 million for legal settlements or settlement offers with certain states over youth consumer protection and digital safety issues. Earlier failures, weak controls, or delayed fixes are no longer abstract once that money has to be reserved. Spreadsheet line or not, that $57 million proves earlier mistakes are catching up. Annoying features are now mandatory because the old hands-off version of the platform is no longer defensible. Casually, nobody logs in for compliance, yet compliance now shapes who can talk, who can stay, and who can spend a day. Tomorrow's question is whether stricter rules shrink the crowd that stays. Here the user data matters more than paperwork. Users still showed up in huge numbers despite the headlines. Daily actives reached 132 million, up 35% from a year earlier. Hours engaged hit 31 billion, up 43%. Average payers reached 31 million, up more than 50%. Clearly those are not weak numbers. Growth, however, is no longer arriving in the smooth, low-friction way investors got used to. After that comes the split-screen problem. Worldwide, Roblox said 51% of daily users had completed the age check by the end of the first quarter. United States figures were higher at 65%. Picture the platform cut in two. One side is verified and more unlocked. Another side is unverified and keeps running into limits. Maybe those gates are necessary. Split worlds still weaken the social flow that helped Roblox spread. Whenever half the crowd moves freely and the other half keeps hitting walls, connection gets weaker. Visually, that is the easiest way to explain it. Elsewhere, management is pushing growth toward a different kind of user. Adults matter more because they spend more and are easier to defend in front of regulators. 18+ users, Roblox said, are a major focus. American adults monetize more than 50% higher than users under 18 in the United States. Creators can also earn a higher share of spending from age-checked adults in the United States for qualifying games. Culturally, the brand still looks like a giant toy store. Financially again, the plan increasingly points toward older, verified users with fewer safety headaches. Stop calling Roblox only a game company, and the quarter makes sense. Chat payments, discovery, creators, moderation, and age-based access all sit inside the same machine. Child-heavy social platforms attract more pressure than normal game releases. Once you accept what Roblox really is, the slowdown stops looking surprising. More safety means more limits. Less freedom often means less growth. Reuters said the shares fell sharply after the guidance cut landed. Other reports put the drop in the high teens to the mid-20s, with more than $7 billion wiped from market value. Backers were not paying for a careful platform that gets safer slowly. When management said safety changes were slowing user growth and trimming near-term expectations, the market heard one message: easy growth is over. Still, safety is not the only factor shaping this quarter. Tougher comparisons after unusually strong gains last year also mattered. Russia ban effects also showed up in company commentary about trends. Broader pressure, a maturing platform, and safety friction landed together and made the forward story worse. Management now is trying to sell investors on a longer trade. Better targeting, cleaner communication systems, stronger community feeling, and a healthier platform are the promised rewards later. Maybe works is the argument management once accepted, even if investors are skeptical right now. Yet the trade is real either way: slower near-term growth in exchange for more control and a cleaner structure. Whether investors like that bargain is another question. Take the split screen and tie it to the ending, because that is where the whole story clicks. Brightside shows verified users with fuller access and fewer blocks. Grayside shows unverified users hitting more restrictions, slower communication, and more limits. Visualize that crowd long enough and the business problem becomes obvious. Social platforms grow best when everyone can move easily and pull other people along with them. Fractured networks do the opposite. Network effects weaken once conversation, discovery, and access stop feeling seamless. Analytically, that helps explain why good user numbers did not save the stock. Raw scale looked strong, but the quality of future flow looked worse. Momentum traders do not buy yesterday's activity when they think tomorrow's slope is flattening. Guidance cuts tell the market which direction management believes the business is actually moving. Credibility matters here because the company itself named safety friction as a real headwind. Dismiss that signal and you are ignoring the people who run the platform. Operationally, Roblox is trading some speed for more control. Cleaner systems may help later if parents trust the platform more and regulators back off. Stronger rules may also make the ecosystem easier to defend when the next legal or political fight arrives. Trade-offs like that rarely look exciting in the quarter where they first bite. Transition periods usually feel ugly because costs arrive before benefits do. Hence the stock reaction looked so violent even with strong headline usage numbers. Cynically, Wall Street always says it wants responsible platforms right up until responsibility starts hurting momentum. Safety language sounds great in an earnings deck until it gets attached to slower user growth. Suddenly markets remember what they actually bought, and what they bought was speed. Price tags appear the moment slogans turn into operating costs, legal reserves, and weaker guidance. Openly, Roblox just reached that moment in public. Importantly, the company is not only tightening rules, it is also nudging creators toward adult spending. Incentives matter because creators will follow the audience that pays better. Adult monetization therefore shapes which games get built, which features get emphasized, and which social spaces become worth maintaining. Younger users may still drive culture and scale, but older users are becoming more valuable to the business model. Eventually that shift will change the feel of the platform, even if the logo and branding stay familiar. Contextually, this is what happens when a child-heavy social platform grows up under pressure. Early years rewarded expansion first and cleanup later. Regulatory scrutiny changes that order because cleanup eventually becomes part of the cost of staying huge. Things like legal liability and identity checks are not side projects anymore. They are just part of the monthly bill. None of that means Roblox is finished. All of it means the market has to price the company differently now. Editorially, the clean takeaway is not complicated. Good numbers describe the present, but weaker guidance describe the future. Present strength kept the quarter from looking like a collapse. Future weakness is what crushed the stock. Safety friction sits in the middle because it explains why those two pictures no longer line up cleanly. Fundamentally, that is the real breakdown, and it is stronger than any dramatic death narrative. Finally, put the takeaways where they belong. First, Roblox remains big, active, and profitable. Second, safety changes are creating enough drag that management had to cut expectations. Third, older verified users matter more because they spend more and are easier to defend. Fourth, the market sold off because the fast, easy growth version of Roblox looks less believable now. Conclusion, the safety tax is not a slogan anymore. Reality turned it into math, and math turned it into a brutal, public sell-off.